So during this time of year, everyone is making resolutions. And one of the goals most people have is to invest and manage their finances better. Especially now when the Fed is desperately trying to control inflation, you're literally losing money if you're letting your money sit. With the reported inflation being 7%, it's at a level that hasn't been seen for the past 30 years. In fact, if your salary is not going up at least 7% this year, then you're technically being paid less. That's why it's more important than ever to invest and put your money to work. So in this video, we'll be going over how I'm investing my money, the methods I'm using, and how risky each of them are. As always, this is not financial advice. I'm just sharing what and why I'm doing certain things, so treat it as entertainment. So first up, you have to have a solid foundation, and you'll do that with retirement accounts like having a 401k. If you're employed, you'll probably have this through your employer. And if you're lucky, sometimes employers will also match the contribution that you put in. For example, maybe they'll match 50% up to 7% of your total salary. So say you're making $100,000 a year and you put in $7,000. Then the employer will match you half of that, so $3,500, and put that into your account as well, totaling $10,500. Nowhere else are you getting free guaranteed return on your investment like that. So putting in $10,500 every year at a pretty stable 8% a year, which is underestimating what the S&P 500 has done with getting 10% over the last 60 years, you'll be worth way over $1 million by the time you retire. And by doing this, you're also lowering your taxable income right now too, saving on taxes now and deferring them to later when you retire, likely at a lower tax bracket. But what if you don't have the opportunity to open up a 401k? Maybe your employer doesn't have it, or you aren't a full-time employee. Then comes in the individual retirement accounts, or IRA. With IRAs, you can contribute up to $6,000 a year or $7,000 a year if you're over 50 into a traditional or Roth IRA account. If you want the exact details of the similarities and differences between the two, I have a video where I break it all down, but essentially a Roth IRA lets you contribute after-tax money and then not pay taxes when you pull out the money in the future, whereas the traditional IRA lets you contribute pre-tax money and then defer and pay those taxes when you pull out the gains in the future. Now, both of these are accounts that I personally contribute to get the full matching from my employer in the 401k, as well as maxing out the $6,000 a year in my personal Roth IRA. But remember, these are just accounts, and you need to use the money inside them to then invest in actual investments. And the best way to do this, and probably the safest way, is to invest in index funds or ETFs, which are basically like diversified baskets of stocks that you can buy once into and get exposure to all of them. The most common index that these funds follow is the S&P 500, which can be had by buying through the VFIAX or VOO funds, which are Vanguard's version of tracking the S&P 500. Whichever fund you go with, just make sure they have a really low expense ratio, probably like in the 0.02 to 0.04% range. Doing that will probably give you the safe 8 to 10% a year till the day you retire. But personally, I don't want to wait till I'm 60 to enjoy the fruits of my labor. And yes, diversifying is good, but it's a way to preserve your wealth, not really grow your wealth in a significant way. If you want to accelerate that wealth growth, you have to put in the work and research to find new ways or opportunities to grow that at a higher rate. That's why, although I have a significant portion of my net worth in these safer foundational investments, a lot of my net worth, I'd say probably 2/3, are invested in riskier companies that are not just good, but are involved in basically shaping the future of the world. For example, I was and still am really bullish in Tesla. Yes, the timelines they provide aren't always the most accurate, which they are getting it better on, but they always deliver over and over. With the success of the Model 3 and the Model Y, the upcoming Cybertruck and the future Model 2 or whatever they decide to call it, to full self-driving and unlocking robotaxis in the future, There's no other company that I know of that is innovating at their speed. Most companies are already years behind in EV capabilities, let alone the full self-driving that they're probably even more years behind. And all this is not including things like solar or battery technology that they're innovating on, and even manufacturing innovations like megacasting. And there are a few other companies that are pushing the boundaries of the industry too, like in the finance space or in blockchain, which brings me to my next area investing, which is the crypto space, which is a much riskier area, but also has a much higher potential. Just like being in Tesla a few years ago, being in the crypto space now is still really early, at least for now. I won't go into details on what crypto is or what's a blockchain, because I made a video explaining that I'll link up above, but I break down my crypto investments into 3 different areas: safe plays, more riskier plays, and NFTs. So for safe assets, I consider these projects in the top 10 or 20 in terms of market cap. Bitcoin definitely takes a big chunk of this area with its first mover advantage, the long track record, and more adoption is just the beginning. In fact, I think Bitcoin is one of, if not the only project that has crept into mainstream adoption already. More and more companies are putting crypto and Bitcoin onto their balance sheets. Companies are realigning themselves towards this direction of the future. Banks are already offering custodial services. Futures ETFs exist, with a spot ETF likely to come this year. The good news just keeps on coming, and we're only getting started. Then there's Ethereum, which has a lot of the positives similar to Bitcoin in why I keep it in my portfolio, but it also has the other benefit of basically being like the backbone of the internet. From DeFi with borrowing, lending, and earning, to games and being a settlement layer for layer 2s and so much more, the possibilities on this chain are endless. The one additional risk here is if ETH 2.0 and their future roadmap continues to get delayed or doesn't play out, a lot of its market share could be taken up by other layer 1s, which is the other area of my crypto investments. These include the likes of Solana, Phantom, Avalanche, Polkadot, Cardano, and a few others, and are projects that I think are late enough in their life cycle that they won't just go bust, but also has big potential to eventually catch up to, or dare I say overflip, Ethereum. Ethereum has already paved the way in terms of market cap of how big a layer 1 can get. So it just makes it not as surprising if other good layer 1s follow that trajectory and get up to that space as well. Lastly, there are NFTs. Yes, most NFTs, like 98% of them, are probably gonna go bust in the long term. But that doesn't mean that you can't put in the work and research to find those blue chips now that will outlast that, or even follow the trends and see what people are talking about and making money in the short to medium term. As long as you put in the work, get involved in the community, get connected, you have a really good shot at being successful in this space. Personally, between researching projects, DeFi, NFTs, and all those things, I probably consume at least 4 to 6 hours of content every day for the last year, with no signs of slowing down. Even then, that's barely enough time to keep up with all the innovation that's been happening every single day and every single week in this space. But that's the trade-off. You gotta put in the work in order to get ahead of the curve and capitalize on this once-in-a-lifetime opportunity. Lastly, for 2022, I want to invest in the skill set needed to improve side projects like this YouTube channel, whether that be scripting what I say, to different video angles, to different ways of editing or making thumbnails. Those are all really good skill sets to have for the future. In fact, one of the things I want to do this year is to expand the reach of my content, like making shorter segments and having them on TikTok, IG Reels, or even YouTube Shorts. If you have any suggestions on what you like to see out of me or this channel, let me know down in the comments. That said, none of this matters if you don't invest in and take care of your own health, both mentally and physically. So focus on those too. So nowadays there are a ton of ways to invest, more so than the ones we covered in today's video. For example, you can start a business, whether that be drop shipping or creating a private label or an actual business, to things like doing wholesaling or getting into real estate. But in order to do real estate or other things that require borrowing money, you'll want to make sure that you have a good credit score, which is another goal that people have for their New Year's resolutions, which is to increase and better their credit score. So if you want to take care of your credit score or raise it fast, check out this video that goes over what is part of your credit score, as well as tips and tricks on how to increase it quickly. That said, thank you so much for watching. Hopefully you have an awesome start to your new year, and I'll see you in the next one.